All right. So the last thing we was talking about, we marking the pair real hard.
What pair is that?
Euro card.
All right.
Right? So we can look at this for some opportunities.
Okay.
Right? In the future. And again, something Roxa was talking about the other day. We selling this on the break of this trend line. Alright, you wait for a trend line break. If we get a break below the trend line here, wait for the pullback, a limit order, 50% of the bearish candle, and catch them going down the road. Right? That is once we get a breakout to the downside. If we get a breakout to the top, we'll have a sell limit waiting here. But we got some reaction before. Right? And we go catch the pullback to the trend line, and like we see what the market want to do if we want to continue upwards. Right?
Or go down, or go downwards.
Yeah, or go downwards. Right?
Gotcha.
Will you understand?
Yeah.
Now, anybody else who have a little more experience, like how earlier on somebody correct me, IRL, VRL, welcoming them kind of thing. If we have a little more experience and thing, or they could say what they say too now. Right? This is for other people to learn also. Right?
So I learned something on working. So as I say, the demand area is where we have all the buyers, right? They want to buy, and the supply is where you're selling. But the demand will be at the bottom, and supply will be at the top. That's what they're saying.
Yes, I believe that. What I don't know if this guy is still on the call. Yeah. Supply is on top.
On the call. Yeah.
Yeah. Right. Is he correct? Right.
Right.
Yeah. Correct.
All right. Nice.
Yeah. Supply on top, demand will be down.
On the bottom.
Yeah.
Yes. I learned something today. I thought it could have been anywhere.
Nah. And you had to look for them big candles moving out of the zones real quick.
Yeah, correct. Yeah, the volatility and the time they exit and the strong move down, right?
Right.
Gotcha.
All right. The next point, we have to keep in mind the freshness of the zone. Right? You want to see if the zone was ever touched before, and if it was touched, how much times it was touched. Because the more touches on the zone, the weaker the zone does get.
Just something real quick on the demand and supply so that maybe it could stick a lot better. Take it this way, like when the demand is high, when your stock is down, so you want to buy stuff, buy things when the demand is high, and when you have things in excess supply, you want to sell. So that's why supply is up and demand is down. Just put it that way so you can understand better.
Yeah, it's like an inverse reaction, inverse relation then.
Yeah.
All right, gotcha.
All right, nice. Thanks, brother.
Yeah.
You're welcome.
Thank you.
Right. The amateur squeeze. Right. Now I just follow a few people on when I'm doing my research and thing now. Right?
Yeah.
So I'm gonna share some information here with all you. Right? All you see in my screen at all?
Yes.
Yep.
All right, all you see in this file open, right?
Yep.
Yes.
Accumulation.
Accumulation, yeah.
All right. Wait for it. This is Trader City. Right? When I was learning, I do real research. I know it's a real free thing out there, so you know, I was one of the people that started IML and I took in the basics and thing. And I just started to look outside now for more education and thing. And I came across a few people and these are one of the people I used to follow and thing now. In terms of education and thing, like watch all the videos on YouTube and thing. So all I understand this accumulation and distribution, I believe those call it, right? Right? So the guy that was correcting me there, you sound like you are real knowledge in this. Right? Hello? Be quiet, boy. All right. So like this is the areas we're talking about where the market like made a big move off, right? You see it? Short accumulation with fake breakout. Right? All you seeing this, right?
No, we ain't seeing it.
Yeah,
it's still loading.
It's still loading.
Yeah.
I see it on
we've seen the polars, but like we are seeing the big screen where you see.
Yeah.
New chart.
Yeah, open it.
New share. All right. Supply demand. But I click on a new share supply demand and I'm not seeing it coming up screen. Are you seeing it now?
Yeah,
Yeah,
we
we
see
see
it.
All right, nice. Like it open a separate thing there just now. All right, so let's see the little notes, right? Which part of mark out the zone here? All right, short accumulation with fake breakout acting as a trap. Professionals loaded up some buy orders, strong breakout, showed strong imbalance. So let's see the big move out at the zone, right?
Yeah.
And then it came back to the zone here. And the same thing happened. It pushed off right. This time it really make a bigger move upwards. Hello?
Yeah.
All right, so let's understand that level, right? That in terms of the supply demand zone. Right? How to mark it is this was our first zone. And this was the first touch on that zone. Right? Let's see if I could find our next example to show you. I download a few thing from them here. Right. For example, at the spring. Right? This is an example of the spring. So let's see it. We had a little consolidation and we had a false breakout here.
Yeah.
Push the market down, full it up with orders, and straight back up the road.
W pattern.
Yes, the W pattern. I just look to sell this at the 161 level. Sometimes with this consolidation, you will get a little pullback outside the box. You will shoot up, pull back to it, and you can have a well, now the time you can pop in and order here because sometimes there's pull back in the box here.
Right.
It does have false breakouts here too. So most of the time I will wait for some more confirmation before I take this trade now.
You could probably do an inverse head and shoulder to the left structure.
Yeah, sure, right. Right? This man know you talking about and you holding back things, you know. Alright? I'm gonna look for next screen to show you again. Before you don't understand anything, or you can just say now. Alright? I just show you some examples here. Right? So let's see in this area here, this chart and all right. Very short time spent at this demand zone here. Strong imbalance between the buyers and sellers. Let's see the zone here. Or let's see this next zone here, the mark out and all too, right? We was talking about the pullbacks.
Yeah.
Pullback here, and then we had a little pause in the same zone. And then take it up to the sky. We had an opportunity to buy from here. We had an opportunity to buy from this zone also here. Right? All we have to do is mark out these zones. Where you see these big impulsive moves and things. Even the cells. When you see the cell here and all, what's the cell here? I mean, they didn't use this as an example, but we could see it. We can mark it out and catch a little cell here too. Right? We had to react to what the market doing, not what we wanted to do. Right? We see it selling. We go tell ourselves we're gonna continue sell it coming down here.
Yeah.
But react, it bounce off at this level and go on before it starts to sell again. Yep.
Oh, so that way it does get catch.
Yep. And what if they didn't extend the zone? If you extend the zone all the way out here, how much time it bounce on it before it actually break through?
Right? I got you.
And you would get catch here too with a little sell. You'll get catch here. But I retrace hard. You understand?
Gotcha.
And then fall. Right?
Right.
I think I have one more to show you.
So Edwards, that zone is like based on the 50% candle stuff talking about earlier on. The zone.
That's supply and demand.
The 50% I was talking about is actually for entries.
Okay.
And yes, for entries actually. Because like when you have the breakout candle, you will get a retracement to 50% of the breakout candle. Or 61.8% of the breakout candle.
Okay.
Right? But you know it had a rally a little bit. You go push a little bit and then come back.
Yeah.
Right? Not all the time it does happen. Based on the strength of the move, it will always happen.
Okay.
Right?
Yeah.
So I'm gonna show you this one. Or let's see in this chart, right?
Yeah.
Right? So let's see the zones are plot out and the reaction on the zones, right?
Mm-hmm.
Now this zone is a next one where some people are get catch. Because you see this big drop here, right?
Mm.
It had a strong impulsive move here. We have to pay attention to the force it coming out of zones with too, eh?
Mm.
You might think it will fall hard here, but it didn't. It fall a little bit and then continue up the road again.
Trap sellers.
Right. But you know what you're talking about. I feel like I'll get you on our next Zoom call, you know.
Yeah,
I'll
right.
share some of your knowledge, you know. Right? Right? We had this zone here. We had a big move off far. It's our first zone. First time it come active. What we get? On the right. Have you seen it?
Yeah, you got bullish move on the right.
I'm on the training call. I'm coming.
Right? We had this big empty space here. You gotta watch this too, eh? Empty spaces are a big thing to watch too, eh? You see when you
Time
have
period.
yeah, you see when you have big space like this,
Yeah.
and if the space had to fill up, when it reached back to a price level or zone that reacted off of that zone in that empty space, you will get reaction. Sure. It have people waiting there. Buyers or sellers. Right? Same thing was showing all in Eurocard. The big empty space it had. As it reach up in that zone, you only see what happened, it start to sell.
Yeah.
Right? So we have to pay attention to the higher time frames. Again, I say that the higher time frame will show you the bigger picture of what's going on.
True.
Right? And you enter in the lower time frames. Right? Top down analysis.
All that in the Bible.
Yeah, that all out in the Bible.
Yeah, that's the Bible good boy.
Right? That when I came across that book, watch now, that changed everything, you know.
True.
That and Invictus effects.
Right.
Watch now, that changed everything for me.
I'm glad I'm learning from the best. I'm going to read all our Bible.
I's not the best, eh? It's not plenty better than me, but, you know?
Rocky, quiet.
Rocky just real quiet. Right?
They still eating.
Yeah, he's still full in the face. Rally base drop. I show my partner know all this. Cola,
Yeah.
I show you nobody rally base drop.
Yeah, I know about the rally base drop.
Nice. You want to tell them about it?
I'm trying to identify it in this chart.
Rally base drop. Drop base rally.
Where's the
Everything right
base?
there. The base here? Drop
Really?
base rally.
Oh. Drop base rally. Okay.
These things are key, right?
Yeah.
If you trade on a daily basis, the hourly candle or the forward candle, you may lose vision or focus of that so easy. As you rightly say, if you're not looking at the bigger picture, you wouldn't get the picture.
You wouldn't understand, yes.
For me, to the right, all I can see is a rally base rally. Like here is a rally, base, rally, then like a base rally or something like that, if I'm correct.
Yeah, you're correct. You're correct also. Yeah, you're correct also. The areas with consolidating and then pushing again.
Yeah.
Yeah, you're correct also.
That's continuation, Kula.
Okay.
You see? Rocky, you come at the right time.
I woke up the sleeping giant.
So, if you go to the left of your screen.
All right.
Your left?
Yeah.
Right.
Yeah.
You see the drop? What is the drop? The drop.
The left, this is the drop. This is the base. Yeah.
No, that's not the base.
Oh, what's that?
The drop for all of that selling pressure because buyers took out the positions and the sellers took out the positions and buyers came in. So all the selling pressure got absorbed and buying pressure came in. So that is the base.
Oh, okay.
Show me the base.
I thought the base, okay, this is the base here.
Yeah, that is the base. That is where all the selling pressure got absorbed. So that is where the buyers, in order for all of that momentum to be absorbed, that area has to be very important.
I did think that base used to have a little bit of accumulation around it.
Yeah, if you go down on the lower time frames, you will see accumulation.
Okay.
Accumulation is actually to the top.
Okay.
No, accumulation is to the bottom, yeah. distribution is to the top.
Mm-hmm.
Right? So you have to take into consideration that heavy momentum coming down to your left, the heavy momentum, in order for it to be absorbed and for buyers to come in, that has to be a very important price point. So that is the area you should focus on. See it outlined in gray. That is actually the demand zone from the wick to the body of the candles. Yes, that's the two way you have to draw it.
Okay.
All right. So
same thing on the top here.
What you was looking at just now was continuation patterns.
Okay.
The market already in momentum. It took a rest. You find a pattern and it continued. That's a continuation. That was not a drop-based rally or a rally-based drop.
Okay.
All right.
Fair enough.
I educated here too.
We got the professionals in the house.
All right. That's a great time. We won this, right?
The price.
Everybody learn from each other.
Question: you ever see compression or exhaustion on the daily before the explosion?
Repeat, Donnie.
Like how when we going on the smaller time frame, the 1 hours and 4 hours, you see plenty compression before a big explosion. What about on the daily? You ever see that on the daily?
Rocky.
Yeah, you see it on the daily too.
Daily too. Okay.
No, but remember, in order to trade the daily, your stop loss had to be a certain length away.
Yeah, too big.
Yeah, remember, we doing candle addition, so we're going down lower, we're drilling down in. See, see when you're selling on highs, on lower highs, you're buying on lower lows, and you're selling on resistances and you're selling on supports. So in order to identify it on the higher time frame, you have the higher time frame structure. So you identify it because our daily resistance will have more weight than a 4-hourly or a 1-hourly. So you find the daily resistance, then you go down inside the actual resistance point. You go on the 4 hours, then you narrow down the 4 hours. So when you get a specific area within the 4 hours, all right, let me go down on the 1 hour to look into that high point of the resistance. I want a better entry with less risk, more reward. So you always have to treat each time frame. You have to use each time frame.
Yeah,
right?
Start from the top, come down.
Yeah, right, top down, because you want to get the higher time frame view on structure, and you want to drill down to get the lower entry points and so on. Now you want to get entry points, so the lower time frame will be more suitable for that. Because you actually, like, if you see a high on a daily, right? I don't take trades on the high on the daily. I go in on the 4 hours and drill it into the high. And when I drill along into the high, I go look for the lower lows, lower highs, little patterns, breakout patterns, consolidation breakouts. So each time frame you have to treat differently. You have higher time frames for direction. You must have a pattern viewer or a setup viewer. Like a 4-hourly for me is like a setup viewer. What is it for setup? Then I have trigger time frames where I look at to enter a 1 hour, 30 minutes, 50 minutes.
Right.
I don't draw support and resistances nothing lower than an hour. 4 hours actually.
4 hours, yeah. Right,
because you want more. Remember, this is probability. You want more.
Yeah, less risk, more reward.
Yes, you are stressing on that. You don't get tired. That is a very, very, very important point.
True.
That's in the Bible too? The Candlestick Bible?
Yeah, you'll see it. You'll see it. Yeah, you'll see it.
All right.
You all have time to go through CAD, JPY, and US CAD.
US CAD. Looking do it now.
You tell her what I don't trade that GJ. Yeah. Really. Look, I didn't even have it properly set up on my chart yet.
It's a monster, that's why.
I only take that trade on my phone the other day, you know, because I see it on my phone now. I said, what? They break this trend line, but let me take this one time, yes?
Ole understood what I just said, right?
Yeah.
I didn't talk too much science for Ole, right? It's just simple. Simple stuff.
You tell me again now.
You could check it back in the recording. I don't want to take up too much of keen.
Yeah, all right, gotcha. No sin.
All
right, where you want to see that was Lucius?
Yeah, I wanted to see US CAD and CAD. Yeah, no, card JPY.
Oh, card JP. What? All right. I'm out the US card.
Yeah.
All right, US card. Look. I have this 2-zone still mark out here. Oh, let's see in my screen, right?
Yeah.
Yes.
Right. So let's see what's going on here, right? This big empty space, and I see the reaction on it.
Right.
Supply zone.
Watch on the weekly, eh? Watch what you see on the weekly here. You see them 2 wicks?
Yeah.
And this drop.
Mm-hmm.
We had a reaction on the same zone.
Keen, just
Yeah.
zoom out and just zoom out and see something. Zoom out. That's now, huh? That's now. Wait. Don't do nothing yet. I see something.
All right.
Yeah, I seen something there. I'll show you after. Right, go ahead now.
On the far left.
So you see in there?
Nah, I seen something real dread there. Y'all look at see.
What this drop?
No. Far left you
A high mountain to climb up.
Yeah. You're watching up there.
Yeah.
Yeah, up there. We see nothing both sides of that. You see on that multi. What? I watch. It don't go on this high, eh? This high, don't go on that high, eh?
You have 2 flags formation there.
Somebody says something nice, a double wave correction, Rocky, that what you call it?
Yeah, flag.
Is a flag, a bullish flag.
Yeah.
This flag.
Oh, so we going up here then?
Yes.
I seen something a little different. I will show you.
Bearish flag.
Hey, Rocky, share your screen now.
No,
Those are bearish flags and it went up.
all right, that's now.
Okay, I see.
That's now. And now see it there as you open up your chats.
I want you to utilize the time wisely now, boy.
All right. I'll share my screen now.
All right. I'm gonna stop share.
Yeah. Sure. I don't open up a browser. Hold on, I will use this one, yes? Yes, sir. Just give me a minute, people. All right.
Okay.
You
all see my screen there?
Yeah.
All right. I just see something there with
Eurocard?
with what's the name of the players looking at?
Eurocard?
Eurocard.
USD card, right?
USD card, yeah, sorry.
I just see something. So you know how market is relate in price and time, right? Anybody know that, right?
Yeah.
All right, market is related in price and time. I'll show you something. This is real cool. All right. So we're marking all the swings. So this swing equals to this swing equals to this swing. So we're looking for equal move up. So this
another swing, exactly. Okay.
right. So we taking this swing, we putting it here. Right? It lines up with this supply at the top, right?
Yeah.
And if we take this swing from here to here, and we project our move, project our move, boom.
Nice. Okay.
And we just do like this.
It lines up with that demand. Okay.
Wow.
Hey,
beautiful.
Rockstar.
Badass.
It goes up then. Going back up there.
Boom. Rockstar is the market maker.
Wait, boy. Okay.
That move different, yeah.
So that what we're looking for, right?
Yeah, we could get that, but before it reached there, it had to wobble a little bit. So that's why I'm looking for. Anyway, forget this. All right. I will show how I does because James was talking about top down, boy. To show them top down. All right, let me look at top down now, right? First of all, you look on the higher time frames. You see the direction of the market. You see the momentum. All right.
Down.
All right. So what I like to do, I like to focus on price where price is at right now. Fresh price areas. So I'll take my tool and I'll look to the top. This is a
supply.
This is a zone. This is a reaction zone where price reacted from. I got a top. I have a bottom here now. All right. So I'm taking from the left to the right. All right. Left to the right. All right. I have two zones identified here, right? On the weekly chart. All right. So I have two important zones here. All right. Anything else I can find? I don't think so right now. I'll go down on the daily charts. I'm looking for daily areas. You see how price respected these little areas are put on the weekly chart? So I'm focusing on where price is right now. I'm not focusing on all this rubbish here. I'm focusing on what happening right now, present. So I'll take another zone, change it to blue. I'm looking for price reaction areas, areas where price reacted. I'm looking for U-turns, where price U-turned or stopped and resisted or supported. Understand?
Yeah.
So price supported here and it U-turned. So this could be a little zone here too, right? We stretch it across. We get the body of the candle to the wick. All right, that is one area of relevance. Let me see again. Right, we're looking for. I'm concerned about that right now. I'm concerned about here. Price trap here. I was concerned about here.
The closest point you're watching.
Yep.
All right.
This is a nice little zone here too. All right. So we focus on where prices are right now, right? So we have a resistance point here. Price shut down from. We have an expert here, a point here where price shut down from, right?
Yeah.
All right. Let me go on the forward and see if we find any little zones because the price reacting on a weekly supportive region, right? Let me look for some forward zones. I just like to use lines. I don't like to much zone it out so much. So we're looking for U-turns where price U-turned, stop or resisted or supported. So price make a U-turn here. So that's telling me for price to come down with this momentum and turn, it has to have some buying interest here. So I'll mark this zone out. I'll stretch it across out. Common points of touches one. So this good here, right? This is a zone I could consider. Any zone to the top. I see a little mini resistance support here, so I can take this. I could put it here, but nah, leave it just so. Leave it just so. So we're waiting for we're looking for high probability trades. So we're looking for the high probability areas. High probability areas is here, here, here. Done. That is all you have to do. So wait for price to reach a high probability areas. You wait for price to reach here, you wait for price to reach here, you wait for price to react here. If you want to narrow down here, like what I did just now, I went inside my weekly zone and I found area where price reacted from. So this is a common point.
It could come down to that zone and bounce back up.
Yeah, it could come down, but you see how price getting support.
Yeah.
You understand?
So I got a question, Rocky, then. So would you now put a limit orders in those zones or you wait for price to get to that zone before you execute?
No, you have to let the market open. You have to let the market set up. The market not setting up yet. This is only one candle. You can't base a trade off one candle.
Excuse me, I can say something?
Yeah,
No. What I mean is, would you put a limit orders in that blue or yellow zone, like the buy limit or sell limit, or you would rather wait for price to get to the zone before you react?
I will wait a little bit to see if the momentum of the candles, like if it's slowing down, then I go per limit. Then I know something happening there.
Okay.
If I per limit and they move on, so whoosh, what happened? You lost.
Yeah.
Understand? So you have to know when to put it and how to put it.
I can say something?
Okay. Yes.
Right now, which part to get our pause right there? Is 50% of our bullish candle, right?
Yeah, I see that.
50%.
Oh, right? You guys see this, right?
And if you watch straight to the left, right there, you see what going on there?
Yeah.
Right there, that same zone here, this to the left, more to the left, Rocky.
Yeah.
Go again. Yes, that point.
Right, shooting star.
No, you see a take off from there?
Yeah.
You had a big impulsive move from that same level?
I think on the daily, that a shooting star there, I think.
Yeah, that shooting star in that area. Yeah. So you can watch your price on these two areas.
Yeah.
Right? And you see it above this consolidation region here. You could wait to see what's going on. And I just use plenty patterns, right? So patterns could be like this. Right? That is one pattern. You're going to daily and find see if you have a bigger pattern on the daily. Have a bigger pattern on the daily. Yeah, let me see. Yeah, have a bigger pattern on the daily. 1, 2.
Oh.
Right, so the market coiling up here, right? High, 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 lower, high. It could come up here. Let me see if I do a Fibonacci and see if it could come up to this high right here. And if you could use in cycle trading, like others like to use cycle trading, you could measure this move here.
What do you say ABC we was talking about the other day, boy?
Okay,
ABCD? ABCD?
yeah,
What we was talking about that? And then go back to the trend line and then fall?
yeah. So I'm marking this zone here for our targets. I'll get my Fibonacci extension at the targets right here. So, yeah.
Righty. Is that our trend line right there?
Yeah. But I like how it's coiling up, you know. But the trend line get broken, you know. They get broken. So it have a higher trend line on top, a higher time frame trend line on top.
Yeah.
You see higher time frame trend line? Right. So that's how you raise. And as a person like double waves, right? I like to see double waves. Like this. Like this is a double wave. I like to see double waves. You can put our trend line. Hey, what I want you to do? Or in either all that demo account, because this is what I used to do. Like I was telling Keen earlier, right? I don't know all that demo account, or if all I want to take it on a live account is up to you all, but practice one type of entry for the week. Like this week, all right, I used to practice just trend line breaking for one whole week. Any trade setup I get was only trend line breaks.
Right.
Right, so if all I could find a valid trend line and just do trend line breaks. That's all. That's only entry you're doing. If you do see any trend line break, you're not doing anything. You all have the discipline to do that?
Rocky, I use that week and I get 100% success in a start. I say thanks, brother.
Yeah, man. I know scene. I know scene. And you could use trend line breaks, Keen's 50% rule, or you could use Fibonacci's. But I want all to practice just one entry technique per week or per 2 weeks till all them master it. All could do that? Anybody could do that? Anybody in chat?
Yeah. Could try that. Man.
That's all they're doing. One entry technique.
I wanted to think to what Keen said earlier, Rocky, and you might be able to expound on it. Rocky said, Keen said something. Every time you have a touch on a zone, the more touches, the weaker the zone gets.
Yeah, the weaker the zone gets. Yeah.
I observed that, like especially with EU, when it was breaking that 1,300 here, it had touched there around 3 times, but you had checked it as 2 when we were going over the first webinar.
Because actual touch on your zone, I like to see U-turns. Remember, you're looking for U-turns. What do you market right. U-turn?
Strong momentum.
Yeah, you want U-turns or you want to rest? You want to either market to rest or make U-turns. I like to see U-turns. That I know is a strong reaction point. Like this is a U-turn. This is a U-turn. This is a U-turn. Right, so this zone fresh currently. Price hasn't revisited back this zone yet.
No.
So price reacted once, twice. Third time is always be the monster time.
So that'll be the sell when it come back up.
You gotta wait and see what's going on. If it stay and remain and start to lose momentum. Yeah. Right, like this for instance, I'll show what I used to do. I used to go and find stuff on the chart for a trend line. Wait till it break, enter. Wait till it take out this low. If it take out this low, right. Lower lows form. All I have patience to wait for this lower low to form.
Yes.
Well, anybody have patience to wait? Yeah. So you get a trend line break, right? You take it, whatever, bam, you take profit here, you're done. Right? If the market break this low and create lower lows and make a U-turn, you know you're going on the 50% Fibonacci to get your entry.
Right, so you have
your entry show there. So you get lower lows confirmed, you get your U-turn, you get your lower lows confirmed, you wait for it to come up to the 50%, bam, 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 you take it straight on to the 6-1. You get a couple hundred pips profit. That's how I do 3 trend line breaks. I'll be very aggressive and I'll be conservative. This is a conservative setup. You wait for your lower lows to form. When your lower lows are formed, you wait for a retracement. You wait for a rally. Once you get a rally, you take your Fibonacci and look for a retracement of the move, this down move. The retracement of the down move is 50. So you take it here, you have all the authority to take it here. Right? You take it here and you get it move straight on. Right? So what I want all you to do, for this week alone, let's practice one entry technique. You all could do that? I want to hear.
Yeah.
Yeah, let's practice entry techniques. That's all.
We have 3 minutes.
The options are trend.
Just trend line breaks.
Trend line.
Just practice trend line breaks. Look how easy it is.
Yeah.
Let me find a pair for that is used.
Yeah, less than 3
What
minutes.
do you drop?
Like this, for instance, I use plenty patterns, but watch this. This is our trend line break, right? Trend line break, all right. There are plenty flag patterns and so on. This is a triangle. It's a trend line break. You see it? Pattern. This is a pattern here too. Pattern, right? This is our pattern here too. Pattern. This is our pattern here too. This is our pattern here too. You see?
How you identify the patterns, the waves?
Yeah, the waves and the data points.
Data points, meaning what?
Where we touch it, because in order to confirm a support or resistance, it has to touch more than 2 times.
Okay.
And the 3rd touch is where the move is actually happening.
All right.
Right? So what's patterns again? Patterns galore. Look what's patterns again here. Lord have mercy. Look what patterns again here. Look what flags again here. Again flags, again breakup lows, again. Look how much things again here. Look how easy trading is. Why are they making trading hard for?
Head and shoulders.
Yeah, again, head and shoulders, whatever. Again, this is not a valid head and shoulders though.
No, I see it.
Because it don't have a uptrend rushing into it.
Yeah,
It don't have an uptrend.
a strong uptrend. Yeah.
No, this is just a thing. This is more like a flat correction.
Yeah.
Right? That is not a head and shoulders.
Less than a minute, Rocky. You'll cut off anytime.
Yeah. Well, thanks,
Right.
people.
Yeah,
Thanks, people.
Thanks.
Yeah, thanks for
Thank you very much.
I appreciate it.
Thank you.
See you later tomorrow.
I take
Right?
care.
We do an analysis tomorrow.
Next week. Yeah.
Bye.
Yeah.
All right. What time tomorrow?
Before the market open, like about 5. Right?
5 p.m.
Perfect.
Yeah.
Tomorrow is my
Yeah,
birthday.
I'll be on point, yeah.
Drinking chubby tomorrow.
All right.
Yeah, I will be on point for that, Edward.
All right, cool. No problem.
All right, thanks, sir.
All right. Well, enjoy the weekend or the evening.
All right, you too.
All right, you too.
Yeah.
Later.